Good day, guys. This is Paul Ola here, and I'll be making this video as an introductory lecture to cryptocurrency trading for beginners. It will be on a very beginner level, and so yeah. Firstly, what I need to tell you about cryptocurrency trading is that it is actually very risky. Okay, and as profitable as it is, it can be extremely devastating too and destructive if you play the wrong cards. Okay, so firstly, the rules of cryptocurrency trading that you need to know. The first rule that you need to know about trading is not to go in with an amount you cannot afford to lose. Okay, so if you be trading cryptocurrencies, it would be actually it wouldn't be advisable for you to use any amount that is actually important to you. Okay, so if you be going into cryptocurrency trading, I advise you use a less amount, like a lesser amount that you can actually afford to lose. That's the first rule of cryptocurrency trading, because like I said, as profitable as it is, it can be extremely unprofitable too, and you wouldn't want to be in a situation where you would lose an amount that could actually wreck you or make you devastated. So um the first rule, like I said, reiterating it again, going to only trade cryptocurrencies with an amount you can afford to lose. Do not go into crypto trading with your life savings or your rent fee or your school fee you get, or any amount you plan on using for something much more important in real life. Okay, cryptocurrency trading is like it's digital. Okay, and you would not want to um venture into it with on the wrong side. You won't want to go into it on the wrong side. Okay, so which is why the first thing which is what eventually brings us to risk management. Okay, so this is risk management. So you need to know how to manage your risk well, and so you have your cards set straight from the start. So um, okay, so what happened is that I actually made a trade on Twitter explaining cryptocurrency trading. So I'll be going to that, but before actually going to that, I will actually want to say more about the rules too. So the first thing, a lot of you are actually know about futures trading, but I wouldn't actually recommend that. So remember, I said you are watching this now as a beginner, okay? And I'll be teaching you this on a very beginner level, on a beginner friendly level. So what we'll do right now is we'll trade the basic beginner way. So firstly, I want you to download the Binance Exchange. You can actually download it on your you can download it on your mobile device, you can download it on your Android, you can download it on your iPhone. So you can get it from their respective stores too. If you use your Android, you can get it from your Play Store, and if you use your iPhone, you can get it from the Apple Store too. So what is Binance actually? Binance is a cryptocurrency exchange, and an exchange is where you can actually make trades and other cryptocurrency transactions. So I'll suggest you actually download Binance first. So Binance is beginner friendly too, and if you don't know how to use Binance, I'll make this as explanatory as possible. If you're using a mobile device, I made a video here explaining how to use Binance. Okay, so you can check it out on my channel, how to use the Binance application and trade as a beginner. So I made a 32 minutes long video showing how to use the Binance application. So you can watch that too. And so yeah, from here right now, when it comes to trading, you need to know uh, you need to know some stuffs about trading. So with this, I'll be beginning with technical analysis, and it will be on a very beginner level. Okay, so I made this trade on Twitter, so I'll just use this as a guide so you actually understand it. So from here, it's a trade. So yeah, firstly, what's actually technical analysis? So technical analysis is simply a technique of studying past price action and using that to forecast or predict probable future price movements at certain periods. That is using this trade to predict the future. Okay, so you can actually go to this trade to actually understand the rest too. So we have two types of analysis when it comes to cryptocurrency trading. We have fundamental analysis and we have technical analysis. So fundamental analysis simply means doing your research, And fundamental analysis helps you with cryptocurrencies to buy and hold long term. Then technical analysis helps you to trade on previous price action and then use that to anticipate future price movements. So and we study price action on the chart. Okay, so what's the chart? This right here is what we call a chart. You can see this screen currently that you can see, we call it a chart. Okay, this is a chart. So we can use this to make our technical analysis and then use that to um, like anticipate future price movements. Okay, so yeah, so I also make that explanatory too. So you need to understand that the chart is actually simple but not really easy, but I'll make it as simple as possible for you to understand. And so yeah, so you can actually go through this thread too. I will attach a link to it in the description. And yeah, so like I said, the first thing you need to know about technical analysis is market structure. Okay, so what is market structure? Market structure is anything that exists actually has a structure. Okay, so if we are going to be making analysis on cryptocurrencies, they would actually have a structure too that we can look at too. So market structure is simply the current situation or trend of price. That is the current direction of price. Is it actually bullish or bearish? So um what is a trend to? A trend is simply defined as the constant movement of price in a certain direction too. So like I said, I was going to make I made use of images to explain this. So what is um what is a bullish trend? That is an upward trend. And what is a bearish or downward trend? Now let's go back to the charts. So like I said, a bullish trend means an upward trend. Okay, so now let's move back, let's scroll back. So you can see this is a bullish trend. Why is this a bullish trend? Because like price kept going up. Okay, price kept going up, price kept going up. You can see price, you can see the move up. So this is a bullish trend. You get that? So this is a bullish trend. You can see price move up, move, then a little move down, then a move up again. Price keeps moving up, moving up, moving up. So this is a bullish trend. Okay, this is what we call a bullish trend or a bull move. Okay, because the price was actually moving upward. And then from here, when we got to 64k on BTC, we are making this analysis on BTC. Okay, so I would explain that much later. So then what happened again? You can see price, you can see the trend changed. You see, so the trend changed here from actually being bullish to being bearish. You can see the fall, that is the decline in price. You can see the fall in price. So this is a bearish trend. Okay, so I hope you actually understand that. And then from here to this is a bearish trend, and then it's like we've changed again. We change the trend again. So now the trend has changed to bullish again because price is actually going up. So I hope you understand that too. So I made drawings here, so you can see the same thing here. You can see the same thing here. This is an uptrend, that is an impulsive move up, a move up, that is the price keeps going up, keeps moving up. So which is what we can actually see here. Like I said, like I showed you guys previously, you can see, so this is an uptrend. You can see this is an uptrend, and then this is a downtrend, that is price moving downwards. So yeah, you can see, so this is a downtrend. So yeah, you understand that too. I hope you get that too. So this is where I also need to explain price action to you. It's basic. Okay, you can see the images I sent above and the chart. We had opposite movements despite the fact that we're maintaining a constant trend direction. For instance, in the bullish image where price was going up, we can see we had price fall a bit before going up. That is, when we had this move up, you can see we had a fall. Okay, and then we had another move up, and then we had another fall. Then we had a move up, a fall, a move up again. So let me show you that on the chart too practically. So we can see, you can see that play out here. Okay, a move up, a fall, a move up, a fall, a move up, a fall. You get, then a move up, a fall, a move up, a fall. So you get that too. So and then these two, then in a downtrend, so you can see a move down, then another move up, a move down, a move up, a move down, a move up, then a move down too, which is what we can actually see here too. Again, move down, a move up, a move down, a move up, move down, then a slight move up, and then another move down too. So that was what I was explaining here. It's actually basic price action. So this slight fall is what we call a retracement or a bearish move or a corrective move or a pullback in an uptrend. In an uptrend, we call it a retracement. So you can just call it a pullback. Okay, so I labeled it here again. So then a move up, okay, an impulsive move. I call it any move that moves like this. If it's like in an uptrend. Now once you have a bullish move up, that is an upward move, it is called an impulsive move, okay, or an expansion. And then after we have that, and then we have a pullback. This is what we call a pullback, okay. This move downward is what we call a pullback or a corrective move. And then from there we have another impulsive move, and then we have a corrective move, then we have an impulsive move, and then we have a corrective move, then we also have another impulsive move again, okay. And yeah, which is what okay, let me show you in that's in the bullish trend. You have an impulsive move, then a corrective move or a pullback, or what you know as a dip. You can call it a dip too. Impulsive, corrective, impulsive, corrective, impulsive, corrective, impulsive, corrective too. So yeah, there's that too. And then this right there too. Then in a downtrend too, we just flip things, okay. So in a downtrend, the major move is called the impulsive move, and then the slight reversal is called corrective. Then impulsive, corrective, impulsive, corrective, impulsive. So let me show you that right here on the chart, so you can see this right here too. So we have an impulsive, corrective, impulsive, a corrective. We can call it impulsive, corrective, impulsive. Like see this corrective, though there will be more explanations on this certain move later. And then another impulsive downwards again. So yeah, there's that too. So you understand the difference between an uptrend and a downtrend. This is an uptrend, and then this is a downtrend. So from here let's get to this other side. So how to identify trends too. So we are going deeper into trends line, into trends now. That is our market structure too. So each trend is made of highs and lows. So in a bullish trend or an uptrend, price makes higher highs and higher lows. And this is actually when you buy a cryptocurrency, like when price is actually about to move up to. But I don't want to really say much about that. So let's look at these two. So like I said, this is a higher high, a higher low. This point right here is all called a higher high, okay. This is a high and this is a low, okay. This is a high, this is a low, this is a high, this is a low. So we call this in an uptrend, we call this a higher high, and then we call this a higher low, and then a higher high, a higher low, a higher high, a higher low. Why do we call this higher highs and higher lows? So uh, I labeled this a higher high because, like, we presume we had a move from down here to this present moment, okay, and then a higher low. We call this a higher high because this high, you can see this high right here is higher than this previous high. This is the last high, and then this is a new high, this is a new high, and then okay, right, I didn't label this, okay, so we are just using these three. So this is a high, this is a higher high, this is another higher high, because actually this high right here is higher than this, okay. You know, this is a high and this is another high and this is another high. So which is actually higher? This high is higher, right? And then but this is actually higher than the last one, and then this is also higher than this. So this is why, that's why we call them higher high, higher high, higher high. And then these are lows too, okay. These are lows, these are lows. So this low is a higher low, and then within this low and this low, which is actually higher, you can say it's this. So this, that's why we call this a higher low, because it was because it's placed on the chart is actually higher compared to this, and then this low too is also higher compared to this. So that's how it is in an uptrend. Okay, and then I also explained and the same thing in a bearish trend or a downtrend. So in in a bearish trend where price falls, it makes lower highs and lower lows. So why do we call them lower highs and lower lows? This is a lower low. Okay, remember I said this is a low, this is a high, this is a low, this is a high. I said price makes highs and lows. So this low is actually low, and then this is a lower high, because this high is higher is lower than the previous high. Okay, and then this is a lower low. Between this low and this low, which is actually lower, this, okay, so that's how we call it a lower low, and then this one to a lower low, and then same with this, lower high, lower high, lower high. So that shows we're in a downtrend, because price is the trend is bearish, because price is actually declining or price is falling. Okay, and so one thing you need to know about technical analysis and about the trend or market structure is that the trend does not continue forever. Okay, so if the trend of the cryptocurrency is bullish, it won't continue going up forever. Okay, it will definitely change to a bearish or downward trend after a while, and this is actually a reason why you do need to take profits on your trades too. So a lot of people trade without actually taking profits too, and that's actually not really advisable, because like if you don't take profits, how would you actually what's the point of trading if you won't take profits and enjoy it? So I do explain this. I explain this too. So I abbreviated this. I showed a change in trend, how a trend changes. So this, you remember I said this is an uptrend. Okay, we are an uptrend. Why? This is a higher high, a higher low, a higher high, a higher low, a higher high. But what happened from here? We had a higher low too, right? But you can see we had a lower high. Why? This high is lower than this, so that makes it a lower high, and then we had a lower low. So we had a lower low because this low right here is lower compared to this. That's why it's a lower low. So the trend changed from being an uptrend to a downtrend, because we were having higher highs here, we were having higher highs here, and higher lows, higher lows, higher lows. But what happened? The trend changed to lower highs and lower lows, lower highs, lower lows. So that shows a trend, a trend change from an uptrend to a downtrend, or from a bullish trend to a bearish trend. So that's one thing you do need to know. So the trend does not continue forever too. So I explained that here. H means a higher high, then HL higher low, then LH lower high, LL lower low too. So like I said, you can see price was previously making higher highs and higher lows, but it later failed to go higher than the previous higher high. This is it. This is the last higher high. So that gave us a lower high, because that high, this high is low compared to this, so that makes it a lower low, because this a lower high, I mean. So yeah, I hope you get that too. So now you need to open Binance. Okay, I, I hope you've downloaded your Binance application already. So we'll be making the analysis on our Bitcoin BUSD too. So the thing is, if you actually had if you are downloading it for the first time, I think yours will be in the light page. So you should watch this video to actually understand how to go about it. Like I said, I think I made a video to showing this. um okay, you can watch this video to now to change your interface from being a light to looking like this. Okay, so now we'll use the BTC BUSD pair. So on your home page, this is what it will look like. Okay, this is what it will look like on your phone, or you can also search for BTC or USDT. So that is, we'll make an analysis against the dollar. Okay, BUSD means the United States dollar too, and then same with the USDT, because like they are a dollar, like they are stable coins, they are tagged to a dollar. So we were making our analysis on BTC. BTC means Bitcoin. Okay, so that's what we'll be using. So from this I showed how you can change your interface. So once you click on that, you change from your line chart, you change it to a daily chart. Okay, we'll be starting from the daily chart. Yeah, so you'll be using the daily charts too. So I do hope you've done that. So once you do that, your trend your chart will change from this line chart. So like I told you, an interface for trading, this interface for trading is called a chart. So it change from a line chart to a candlestick chart. So to change to this. So like I said, I was showing a trend change. Okay, um so let's go here. So I show you that. So you can also, if you're using your PC, this is how yours look like. You can download it. So like I said, I was showing you a higher high and higher lows too. So let me show you that. So like I said, this is a higher high. Okay, a higher low, a higher high, higher low, then a higher high, a higher low. Then we also had a higher high. Then what happened from here? We had a lower low. Why? You know, this is a lower this is a, we said this is a higher high, right? And this is a higher low. This is a higher high. And what happened? This low, this this low, this low at this point is lower compared to this. Okay, so let me change let me use should I use okay, let me use a horizontal line for that. So this is a higher low and put that this point. Okay, so you can see this higher low, you can see this higher low is actually higher than this. So this low and this low is lower compared to this previous higher low. So that makes this a higher low. And then what happened from here again? We had a move up, but this high is lower compared to this. So that makes this point a lower high. Okay, so which means we now have a change in trend. Okay, so that's how it works too. So like I said, a higher high, higher low, higher high, higher low, higher high, higher low, higher high, then a lower low, because this low is lower than this. So this is a lower low, and then this is a lower high, and then from there we had a big drop downwards, which is a actually a lower low. Okay, so you can check that out. If you're using your PC, you can also if you're using a PC or you're using a mobile device, you can actually check that out too. So like I said, this is a candlestick chart displayed. I can check out past price action by either zooming out or moving the chart to the right by swiping it. So these symbols you see in red and greens are called candlesticks. Now I told you that earlier, and they display the interaction or and the history of price. So these are candlesticks. Okay, these blocks, these green and red blocks you see are candlesticks. So these green and red blocks you see are what we call candlesticks. Okay, and they interact, they show an interaction of price, they show our price, they show the movement of price. So this is a candlestick, this big these are what we call candlesticks. Okay, so I let's move further, let's move further. So from here right now, you see, you remember we talked about bullish and bearish moves, right? So a bullish move is an upward move displayed in a green candle, while a bearish move is a downward move and it's displayed in a red candle on the chart. So the color scheme makes it easy to understand. So I showed you that here. This is a bearish candlestick. A red candlestick is a bearish one. That is, it shows a fall in price. Okay, it shows a fall, while a bullish candlestick is a green one. This is a bullish candlestick. You see this, with this bullish candlestick we went up. So but with bearish candlesticks we come down. Okay, that's simply what it means. Whenever we have bullish candlesticks, when we that are shown in green, price goes up. But when we have bearish that are red, price comes down. But green move up, green again we move up. Then when we have red, price comes down. You can see we have a red here, so price fell. We also have another red, price fell. Then we have a green, slight move up, bearish candlestick again, so price fell. And then this is a bullish candlestick because it's green. Okay, and then price went up. So these are what we call candlesticks. So you can check that out here, you can check them out here. So these are candlesticks too. So you can see whenever we have red candlesticks, price falls. Okay, you can see the fall because we had series of red candlesticks, and then when we have green candlesticks, price move up, price moves up. Okay, um so you can see our price moves up from price fell here, and then when we have green candlesticks, price moves up. Okay, so with that, let's move on to the next one. I really hope you understand the candlestick. So there will be more explanations on that later. And then, like I told you, remember, technical analysis is all about price actions, and then the actions you see on the chart are battles between buyers and the sellers. Okay, so it's all about dominance in the market. We have two type of traders in the market. We have buyers, and then we have sellers. So you know how supply and demand works. Whenever we have whenever we have buyers, whenever an asset has buyers, that shows an increase in demand. Okay, and then we would have the value of such assets would actually increase. But when we have sellers, when we have a lot of sellers, that shows supply, which means there would be a decline in valuation of the assets too. So that's what it actually means here too. So this is an interaction of it. So this is an interaction of what I just explained, an explanation I mean. So whenever we have more buyers in the market, it will lead to a bullish move, which means the market will go up, or we will have more greens. Okay, so you can see with this we have more greens. With this, you can see this uptrend, we have more greens than reds. So you have more greens than reds, but whenever we have reds, price falls. Okay, so we have more greens here, so which means our price still moving up. But at the moment when we started having a lot of red, you can see the decline in price started falling. So within this period we had a lot of red candlesticks, so which means which signals a decline in price. Okay, so from here right now, so you can zoom out on your chart to have a further view of price. So to simplify things for you, I identified key points for you to understand on BTC. So this as at the time this was it. So yeah, so I highlighted its higher highs, higher lows, highs, and there was supposed to be a lower low. Okay, and then lower high. So let's check that on this chart. Okay, so this was it. Then this was the structure. Then so now I explained that again: a higher high, a higher low, a higher high, a higher low, a higher high, then a lower low. Okay, then a lower high, lower low. So you need to understand that too. So one thing you need to know is that like I said again, I'm repeating it again. When we have higher highs and higher lows, higher highs and higher lows, that shows we're in a bullish trend. Okay, but when we start having lower lows, lower highs, lower lows, lower highs, so that shows we are in a bearish trend. Okay, so that shows a decline in price or a decline in valuation of the cryptocurrency assets. So I labeled that here too. So you can see we have more reds than greens. So I told you this. I just said that too. Um, Whenever we have a change in trend, it shows up. It's called a break in market structure. Okay, so in simple terms, that's what we call that. So with this, I told you a higher high, higher low, higher high, higher low, higher high, higher low, higher high, then a lower low. So what happened? This higher low was broken because we had a lower low. So this is what we call a breaking structure actually. So you can call this a break in structure. So this was the lower low. Okay, but from this point you can see it was broken here. So structure was broken at this point. So it could be a sign of a trend change, though it's not guaranteed always. Okay, so you only confirm a trend change when you have, like for instance in this case, when you have a lower low and then a lower high. So because this high failed to go above this previous high. Okay, so once we have that and then another move down, so that shows a trend, a change in trend. Okay, so now it's time to explain time frames too. So each time frame is an indication of price, of how price interacted within that period. Okay, a time frame indicates a period. Okay, so a daily time frame or a 1 day, as shown in the charts, shows you the result of price on a daily basis. Okay, then a 4-ish or a 4-hour time frame shows you how price interacts every 4 hours, and then same with the 1 hour, 30 minutes, and then so and beyond. So now let's go to a time frame, a lower time frame, to check the trend. So we choose the 4-hour time frame to see how price interacted every past 4 hours. So from here right now, we are on the daily time frame. Okay, how do we know we're on the daily time frame? um if you are using a mobile device, let me just delete this. So like I said, we on previously we are on this. Okay, uh we are using the daily time frame for this analysis because, yeah, you can see 1 day. Okay, 1 day, this is the daily time frame. So now let's go to the 4-hour time frame on here. This is the daily time frame, so you can see it's 1 day. It's shown in 1 day. Okay, so now let's go to the 4-hour time frame. So I'll click on that. So now we'll be analyzing on the 4-hour time frame. So okay, let me show you the daily time frame first. So you can see when I place my cursor on each candlestick, you can see below we have the days below it, which shows for on this day, this was 21 July 2021. Then if I move to the next, it will show 22, 23, 24, 25, 26, so and so on. So each candlestick is for a day. Okay, so but if you go to the 4-hour time frame, it will show each candlestick will be for each 4 hours. It will be for every 4 hours. So now there is a trend. Now we analyze on the 4-hour time frame, so you can see the trend. Okay, let me use this uh okay, let me use which one should I? Okay, from here you can see this move up, you can see this move up. Okay, you can see the move up, a big bullish move up. Okay, there's a big bullish move up, and then another downward move, and then a big move, then a downward move. Okay, but let's analyze. So we're analyzing on the 4-hour time frame. Okay, that is, we are going to a lower period of time to check out the price action on Bitcoin. Okay, so from here, a higher high, we can call it a higher high, a higher low, another higher high, a higher low, higher high, higher low, higher high. This is a lower low. Okay, this is a lower low because this low is lower than this. Okay, so lower low, this is a lower high, this is another like a lower low area. Then we had a higher high. Okay, higher low, higher high, higher low, higher high, higher low. This is actually, it's more or less like the same region. Okay, so let me just call this a higher high, higher low, higher high, higher low, higher high, higher low. Okay, then a lower high, a lower low, a lower high, a lower low, a lower high, a lower low, and then a big higher high. Okay, then let's just stretch it to this point. Okay, and then from here, what happened again? We had a lower high, a lower low, lower high, a lower low, a lower high, and then you can watch the same movement move up here till we had a very, very big drop from here. Okay, so this was on 7th September 2021. Then we had a very, very big drop, so that created a very, very big lower low. Okay, so it was from this point that trend changed. Okay, so and yeah, we have this. So you can see this movement from here. You can see the movement from here. So you can make your analysis on any time frame if you want. Okay, so like I said, this is a 4-hour time frame. You can go to the 1-hour time frame if you want and make your analysis on the 1-hour time frame. You can go to the fifth let's say you can go to the 6-hour time frame if you want, 12-hour time frame. You can go to the 15 minutes time frame if you want. So on the 15 minutes time frame, you can see we are in a bullish trend. Okay, you can see price moving up, up and up, because we have series of higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. So you can see, so this shows we are actually bullish. Okay, so now let's move to the next one too. Yeah, I should explain the time frame stuff to you. So let's new replies. So I showed you this to yeah, So you can, okay, let's get here too. So let's go to the 4 hour time frame. So like I said, this is a very big, we have a series of price action here. Okay, so a big drop here. You can see this big move here. Okay, and then a big, we currently have a bullish move on the 4 hour time frame. You can see price pushing up. Okay, so from this we had a lower high, a lower low, a lower high, lower low, lower low, lower high, lower low, and then now we have, yeah, we are about to have a higher high. Okay, because price is already above these previous highs. Okay, this high here, this high here, and this high here. As this currently price has gone above them, so that means we are going to we already have a change in trend. Okay, so what we expect now is to have a higher high, then a higher low. Can have a higher low into this area and then another higher high. So that will further confirm a change in trend. Okay, so let's move now. Like I said, when we have trading decision, you can watch this about the highs and lows too. So from here you can actually read this to understand. So now you actually do have this and understand them too. So what I would actually want you to do is you can actually go to your chart to it would be advisable for you to go to your charts and run this analysis yourself too. So it will be a good starting point for you to go to your chart and then check out these stuffs too for yourself, so you practicalize them. So um now we've come to the end of the first lesson to technical analysis. So in the next video I'll be explaining candlesticks. Okay, I'll explain more of these candlesticks. So like I told you, these are candlesticks. So in the next video I will explain these candlesticks to you so you understand them too. Guys, goodbye guys. Have a good day too. So I do hope you learned and I hope you got value in this video too. So if you have any questions, don't hesitate to ask or like drop them in the comment section too. So I'll go through them and actually drop your replies too. So till then guys, see you another time. Bye.